Oil is certainly front and center here. Now, why did oil fall 6%? There's a couple of reasons, but you've got to look into what's going to happen in the next 72 hours. Iran is preparing. There's no guarantee they will, but we expect that they will open their floodgates and oil will begin to flow quite dramatically because the sanctions will be lifted most likely this weekend. And we already had the worry about the supply glut roiling the oil markets. We have oil dipping below $30 a barrel, and that's what we see at the moment. We do continue to have that in play off the lows of the session, as you can see from this chart here, but still at 29 and change. It's a new 12-year low. I want to bring in Andy Lipow of Lipow Oil, and as the president of this consulting firm where you've watched this all again, I am throwing out the Liz Clayman contrarian view here. Is it possible, Andy, that Iran, seeing what happened today with oil dropping as precipitously as it has, may possibly say, oh, I see we hold the strings to this puppet, and they perhaps say, all right, we'll hold back from flooding everybody with more Iranian oil, at least for now, and then they look like they have more power over the rest of the OPEC players?
Well, it's certainly possible. In fact, Iran, if the sanctions are lifted, will have access to $100 billion in banks, so they may feel they don't have to sell oil right away. But the indications coming out of Iran is they really want to start selling the oil that's stored on tankers, and there's about 30 million barrels of that stuff that's ready to hit the markets.
You know, when you talk about oil stored in tankers, we need to tell our viewers, they have run out of storage. We're topping off pretty much here in this country, too. There is not a lot of storage left because there's so much pumping. But they are now storing it on big floating tankers off the coast of Iran, and so therefore they've got to move that stuff out. But they're going to do it at a loss, aren't they, Andy? What price do they need to see oil before they even break even?
Well, you know, their break-even cost of oil is probably a little bit less than $30 a barrel because they're one of the low-cost producers like Saudi Arabia and Kuwait, but they really want to maximize their revenues and see oil prices higher. They're just stuck with OPEC because you've got Saudi Arabia, Kuwait, and the United Arab Emirates have no intention of cutting production.
How much does China and the lack of usage, at least at the levels that we've seen in the past because their economy is slowing down, play into this? Can we point the finger at China as well and its slowing economy?
Well, they've certainly contributed because we don't see the demand growth that the market has expected. In fact, we see coming out of China is record amounts of diesel exports, which are really competing with those refiners in the Arabian Gulf and elsewhere, adding to this oversupply of products.
You know, I'm just looking right now because I'm hearing some shouting on behalf of traders. I just need to tell our viewers that we're up, certainly off a little bit of the floor that we saw in the last 13 minutes. Dow Jones Industrials down 386. We had been down 413. But again, we're waiting to see. We're 5 minutes away from seeing a little bit of a reset. And that's when we start to see what kind of drama we might see with margin calls, et cetera. But Andy, in the end, as you look at all of this, what happens to oil companies? Because our viewers own oil stocks, whether it's Marathon or Williams, ExxonMobil, Chevron, Apache, Anadarko. Will they start to cut their dividends in a more meaningful way?
Well, I think this is the biggest worry from these companies. We already had seen Marathon Oil cut their dividend 76%. We're hearing about many of these other companies going cash flow negative and borrowing money to pay their dividends. And I don't think that can really last for a very long time. I don't think the banks really want to be in that position.